Hey everybody, welcome back to the channel. In today's video, we're going over an August 2025 Canmore real estate market update. The statistics are doing some different things than what we're used to. So you're gonna wanna stay tuned to this video. It's really, really important for anybody who's in the market or looking to get into it. Let's start talking about the specific markets.
Sure, we'll go through the markets in Canmore here on overview, and then we'll get into specific property types. So in Canmore, we had 25 sales in the month of August. The average sale price was 1.146 million and change. The average square foot price was $914, and the average days in the market was 28 days.
Let's talk about Dead Man's Flats. We had 4 sales in August. Average sale price 1.148. The average square foot price was $695 a foot, and it took an average of 54 days to sell. Harvey Heights, there was nothing.
Lac des Arcs, we had 1 sale, 1.185 million, $551 a square foot was the average square foot price, and the average days in the market was 48. We had 0 sales in Exshaw this month.
Banff, we saw 1 sale. Average sale price was $588,000. I shouldn't say average, the sale price. The square foot price for that property was $751 a foot, and it took 12 days to move. So those are the markets as an overview. Let's talk about Canmore specifically and the different property types that are within our market. Single family homes, we saw 4 sales. Average sale price was just under 2.1 million. The average square foot price, $780 a foot. And those took an average of 13 days to sell.
Yeah, and I think it's important to understand that the average days on the market is only for the sold listings. Mm-hmm. We'll talk about that a little bit later because it does paint a picture about where we are today and the changes that are happening. So townhomes, we had 6 sales in the month of August. 1.141 million was the average sale price. Average square foot price was 754, and the average days on the market was 21.
Apartment sector, we saw 4 sales. Average sale price for those apartments, $858,000 and change. Average square foot price was $848 a foot, and it took an average of 57 days to sell.
Half duplex, we had 1 sale, just under 1.1 million. $598 was the average square foot price, and 14 days to sell.
Short-term rental market, hotel condos, we saw 7 sales for an average sale price of just under $947,000. Average square foot price was $1,138, and it took an average of 26 days to sell.
Tourist homes, 3 sales in the month of August. $765,000 and change was the average sale price. The average square foot price was $1,086, and the average days on the market was 36 days.
So before we kind of open up the can of worms and get into the statistics and the notes that we want to really discuss and educate people on, let's touch on the year-to-date stuff.
Okay.
You start off. Let's see what happened for sold listings year-to-date.
Okay, so in 2024, we had 339 sales. And in 2025, year-to-date, we have 308, so we're down 9%.
End of month active inventory, basically par. 2024, we saw 135 active listings. 2025, we saw 134 active listings, so pretty much even.
And that's changed. I believe last month, we started to see more active inventory, and we've basically leveled off a bit. Which this time of year tends to do that, so we'll see what that does as we move forward. Average sales price, 1.154 million and change in 2024. In 2025, 1.301, so we are still up 13%. But that number has, over the last 3 or 4 months, we have seen the average sale price drop. I think 4% from last month, 4% from the month before.
Yeah.
So let's talk about why we think that's happening and what we see is going on in the market. Maybe talk about the average days on the market with the active listings compared to the sold.
Yeah. So sold listings, obviously you guys heard at the start of the video for Canmore, we had 28 was the average days on the market to sale. When we're looking at just the active, we're looking at 96 days on the market. So that's roughly 3 times more. So we discussed this, but why don't you educate everyone on why you think the days on the market for sold listings is at 28?
Well, I think strictly pricing. People that are getting sales are getting educated on what is happening in the market.
Yep.
And we are seeing a little bit of a, I don't like the word downturn, but we're seeing a leveling off. And you and I spent some time before the video looking at some historic data.
Yep.
From basically 2007 through to 2025. And I think it kind of didn't alarm us, but it was an education piece for us to go, there have been ebbs and flows like there is in every market. We typically don't see the crashes here, like we talked about maybe and you've seen in Vancouver and Toronto and so on and so forth. But pricing is key.
It's so important.
I think we're seeing a shift from we were in a seller's market for so long.
Yeah.
We kind of went into the balanced, and now I think we're seeing a shift into the buyer's market. Not to say that sellers are losing money on their equity.
Yeah.
Because we haven't seen that happen yet.
No.
Nor might we ever see that.
Yeah.
I'm not sure. But we are seeing some competitive pricing, and we're starting to lean towards a buyer's market.
Yeah.
So sellers need to be very cognizant of what their property is worth in the market today, not based on necessarily what sold 3 and 4 months ago.
Yeah.
Because those prices are dropping a little bit.
Well, I think one thing that I kind of point out when I look at the data is statistically what would happen is, let's just say Bob has a place, he wants to sell it. You look at the sold data, you go, okay, the last one sold for, let's just say $725.
Yeah.
Okay, this is definitely going to be worth $750, $775. I think that's a good price. If that sold, let's just say a couple months ago, that's not happening.
No.
Sure, there's different things in a property that might make one more valuable than the other, but if we're looking at 2 identical units, that's not necessarily happening. So not necessarily a bad thing, but like sellers need to be aware.
Yeah.
And I think if anybody's going to get anything out of this video, it's that pricing matters.
Yeah.
More than it ever has in the last 5 years.
And I think from a buyer's perspective, like you and I were chatting, it's important to understand that you can't time the market in that this is going to fall off the map, I'm going to wait.
Yeah.
Because I don't believe we're going to fall off the map.
No.
And statistically, over the last, from 2007 through till now, the prices have grown and grown substantially, even in the last 5 years.
Yeah.
A home that like we live in was just under $1 million, and it's now 1.6 million.
Yeah.
So things are growing. So I don't think buyers can necessarily go, well, I'm going to wait because the market's going to crash. Because I don't think the market's crashing. No. It is correcting, and we may see a few deals. We've seen some price reductions.
Yep.
So the 28 days on the market for solds is really where the market is if you price your property well.
Yeah.
If you don't, you could be on for 96 days, and you're probably going to end up selling your property because the market is going down a little bit for less than if you would have priced it.
You will. Even if it's somebody's perfect property, they're going to come in and go, okay, this has been on for 3 or 4 months. Okay, I get the money, but I know that there's a little bit of a deal to be had here potentially.
Yeah.
The other thing I wanted to touch on a little bit, and I'm kind of losing my train of thought on this, but I think that because of the way that the market has changed over the year, I think it's a little bit different. So if we look back at like average growth year over year, we're looking kind of around that 8 to 12% in like the best years. I think that the reason why maybe some of this data is like, oh, we're cooling off pretty hard and all this sort of stuff is because of the way we started the year.
Yeah.
Like we started the year like boots on the ground. Like,
oh yeah, we were like
it was unbelievable.
35, 6%.
It was unbelievable. And so it's down to 13% now. So I think a lot of people are going, holy smokes, the market's changing a lot when, yes, it is changing and pricing matters. There's no denying that. But I think from my perspective, and we might have a little bit of a different opinion on this.
But that's okay.
Because I do think that 13% is probably going to drop to be somewhere between 8 and 10%. That's my guess at the end of the year if I was betting. But I just think it took off, and then it was like, well, this doesn't make any sense because 36% is not sustainable. Mm-hmm. And so then it's kind of like, okay, we can't continue on that road. We got to go down this road. So right. I agree in the sense that it's shifting and it's leveling off, and sellers can't be greedy, and there's opportunities for buyers. Yeah. I don't necessarily see the Canmore market getting super low. Maybe that's just, obviously I don't really recall the times when we went through those crashes and all of that. Yeah. So that's just my opinion. I think Canmore is too sheltered from what happens in these other places to get to that point. But at the end of the day, pricing is very, very important right now. I 100% agree with that. And if you're a buyer, I think from now till the end of the year, I think there's going to be some really, really, really good opportunities. And then I think statistically, we're going to roll into 2026. There's going to be still more of those opportunities. January and February are going to be what January and February are. Mm-hmm. And then March, April, it's just not, I don't necessarily expect it to just go boom, but that's when all of a sudden there's more demand and all that sort of stuff. Statistically, the spring is as a seller is always a really good time. Mm-hmm. So I don't see that changing, but.
And I'm maybe a little bit on the other side of you, not completely. I think sectors of the market will definitely do what you're saying, but I do think that we are going to see, this is just my opinion.
That's a great way to put it.
With just my life history and seeing what's happened, there always is corrections in markets. I mean, we talk about the Canmore market going from here to here, and I believe that it will continue to do that, for the foreseeable future. But I do think we are going to see a blip where you're going to noticeably be able to go back 5 years from now and go back and go, oh, there was a dip in the market. Mm-hmm. Not where people are going to lose equity and things are going to, not a crash, but a correction to the point where we may see that 13% be zero or negative.
Yeah.
Maybe.
I can't wrap my head around that, but I mean,
it's not the whole market. I don't think so. I just think there's so many different elements to our market, from investment properties to second homes to, there's always going to be people with money that are going to buy things.
100%.
And, you look at where we live, all of those things taken into consideration. I just think from a market perspective on a whole, I just think we're going to see a little bit of that number creep down towards the zero. Mm-hmm. And but we'll see over time. I'm not concerned about it. I'm not trying to alarm everybody. Just kind of the trend of what I hear, what I see, what's going on in the market is pricing matters 100%. And there's still really good equity in the town. Good time for buyers to start looking at buying.
There's
good
still
time
demand.
For sellers to sell.
There's still demand.
We're not. We're definitely not in a panic mode here. We just want to educate you and and it's great that we both see things a little bit different, because there isn't enough statistical data to go, hey, one way or the other.
Yeah, I agree.
Who knows,
I
right?
Agree. So, and I think too, a lot of it stems from the standpoint of Canmore's just been so rock solid for the last 5 years.
Yeah.
And we've been talking about how, these 20%, 30%, 18%, 15% annual appreciation.
Yeah.
Like, that ain't happening.
It's not sustainable.
It doesn't happen anywhere.
No, it's not sustainable.
Like, it's not sustainable. What's sustainable is 8 to 10%. And we're starting to get close to that. Yeah. And I think, is it a sign of people in the market going, oh man, like my stuff's not selling. Like, how come my place is only worth this? And it's like, well, you've just been a little bit misled on the data for the last 5 years. Yeah. And we're getting to a point now where Canmore is going to grow on a healthy rate, I think. I mean, we're going to see a ton more inventory coming up in Three Sisters. Like, it's not like, okay, yeah, we're tapped for land. Like,
no, we're not land.
That's not happening. Yeah. So I still think it's a great market to be involved in. Obviously, I'm involved in it myself, as are you. It's just, I don't plan on changing that because of what any of this data is saying. It's just, okay, the correction's finally coming.
Yeah.
Right? Yeah. It's finally here. So here's a question for you. I have my opinion on this. If you're a seller and you're, let's just say, maybe not desperate to sell, but you're thinking about it, let's just say it's a second home vacant, the tax bracket that's coming into effect, or you're flipping, or you're doing this, what's your play? Are you throwing it up now, or are you waiting?
Ooh, that's a loaded question. I think all things considered, I think I'm probably holding.
Yeah, I'm waiting until spring.
I think so too, but again, it's situational.
Yeah,
I mean, everybody's reason for doing it, whether it's the vacancy tax or is always different. Mm-hmm. But I think on a whole, I think the springtime would be where we typically see the mm-hmm. most bang for your buck.
Yeah.
But I do see,
that number.
Depending on when you bought.
100%.
And you look at that 28 days on the market.
That's positive. I think you look at the 28 days on the market, and then you look at June to July, 4% year-to-date dip. July to August, 4% year-to-date dip.
Yeah.
Okay, well, if that hits another 4, then it's like, okay.
Or if it does go upside down.
Yeah.
What do you stand to lose? Because when you start talking about $1 million or $2 million, and you're adding 4% to that of a loss every month.
Yeah.
So it's definitely situational.
And keep in mind, that's average sale price year to date. So at the start of the year, we saw these homes that were like $8 million and stuff selling.
Yeah. Yeah.
So keep that in mind. It's not like, oh my gosh, my property's dropping 4% every single month in value. No, this is an average. This is a broad number. Let's just make that clear right now.
Yeah, because we're talking about single family, townhouses, apartments, all in one lump sum, investment properties.
So that number is harsher than it needs to be.
It's very important that if you have questions about a specific type of property that you have, let us know.
Yeah, you have
because it's going to be, the numbers are going to be very different than this just broad perspective.
Don't watch this video or read something in the news or do any of that without consulting with a professional about how that impacts your situation specifically.
Yes, 100%.
Prime example would be like, oh, stock market, it's tanking. Well, you got to sell this or buy this and do all that. We're not going to do any of that before you talk to your financial advisor, because they might go in your situation, oh, this is good. You want to buy all this, or you want to, let's offload this. Or so there's many different ways to look at it. So please reach out to us if you have any questions about your specific property. Like, in my opinion, I think if somebody's got a property, it's a second home, this vacancy home tax comes in, they've maybe had their property for a little while, sell it.
Yeah.
That's what I would do, right? Yeah. If you're concerned about the tax tripling, which is theoretically what it's doing, great time.
Or talk to us about options that aren't inside the town of Canmore.
Yeah.
There's a ton of options, outside of that vacancy tax that is Canmore based.
Totally.
That you can get in the market, take what you have there,
take your Canmore money and buy outside.
Still in the valley, there's some great options. So this has been really informative.
Yeah, this was a good one. Yeah. Stay tuned, because I'm just as curious as you guys are as to what's going to happen with the rest of the data. And September statistically seems to usually be a pretty good month.
Yeah.
So it'll be interesting to see what happens there. But again, if you have any questions, please reach out to us directly. We make it very accessible for you to find that information. And if you wouldn't mind liking and subscribing to the channel, it does help us grow. It allows us to do what we love and continue doing it. So without further ado, that's kind of it for this month. And we look forward to coming at you next month with another market update. Thanks for watching.